Hi, everyone, and welcome to Pathfinder, a podcast by Payload, the leading digital media company in the space industry. I'm your host, Mo Islam, and today we're joined by Chris Morales, partner at Point72 Ventures. Chris is a friend and happens to be one of the leading investors helping fund innovation across aerospace and defense. Today, Chris and I chat about the firm's role in the startup community, why the interest in space, their investment thesis, case studies, and much, much more. Let's get started. Chris, welcome to the show. Excited to have you.
Mo, thank you very much for letting me join.
Yeah, I know. I feel like we have so many of these conversations that we didn't even need to do a formal podcast. We could have just had someone recording our typical conversation when I see you at one of these conferences.
I think that'd be great, although there would be constant interruptions with hors d'oeuvres and sort of folks bumping into one another. I mean, you always have a great cast of characters. There's a lot of impromptu sort of conversation and folks you run into, which is awesome.
Yeah, no, well, we always appreciate your support. Now, Thanksgiving's coming up very soon. And I have a very important question for you, which is, what are your favorite Thanksgiving dishes? Name one or two must-haves that if it's not on the table, you're you're disappointed.
I'm a big
turkey aside. Turkey aside, we're not going to include turkey in this question.
That makes sense. We were actually having a vigorous debate during our team meeting just before this. The ultimate winner for the team was actually turducken. A little bit of variety flavor there. But for me, I'm actually more of a mashed potatoes and gravy type guy. Totally sort of standard, but there's just something comforting about a very buttery mashed potatoes with some awesome gravy and great company and family and everything else. So that's my answer, and I'm sticking to it.
Yeah, awesome. All right, I'll buy it. Yeah, and I would actually say the same. That's a must-have for me. I could go without a lot of things, but without mashed potatoes that one's tough.
It's just not Thanksgiving, right?
This doesn't feel it for sure. Anyway, Chris, you're a partner at Point72 Ventures, great firm. Maybe let's just before we get into your background, give us a little bit of background about the firm and the group, how it's all structured. I know you guys do a lot, not just venture investing. So maybe just give us a quick overview of the firm.
Absolutely. So Point72 Ventures is actually the private investing arm of Point72 Asset Management. We have specialized teams essentially focused on different market segments. So I, along with our managing partner, Dan, run the defense tech strategy. We also have folks who look at AI and look at consumer. We have relatively flexible capital. So although I spend the bulk of my time at the early stage, we're actually able to invest much later. So sort of write checks leading relatively large rounds, which is especially interesting given the space and given how companies tend to mature. Spread out across a handful of different areas. So we have teammates in DC, where I'm based, in New York, in San Francisco, and Seattle. And that's pretty much about it. So I think there's a little bit to the origin story there. So I started off my career in the U.S. Navy. Spent about 8 years there. That wasn't actually a natural progression. I first actually considered serving when I was in New York on 9/11 as a sophomore in high school. So very impactful day for quite a few people out there, and sort of like folks more broadly, and felt the call to serve. That led me to the Naval Academy. Spent some time there, commissioned, subsequently became a naval flight officer, flight school, and then actually wound up being selected as a backseater on F-18s. So I was an F-18 weapons systems officer. That's the Navy's carrier-based airplanes. For those of you who've sort of seen Top Gun Maverick, it's Bob. That was the job I had. If you're more of an OG Top Gun guy, it's Goose. So did that for 8 years. Was awesome. Went to grad school. Actually wrote my grad school essay about wanting to be a VC. But the thing is, I didn't actually know what a VC was before then. I was just Googling, what do you do after grad school? And that's what came up, and it sounded cool. Subsequently, sort of put my dreams behind me and went into investment banking. Did that for 2 years in San Francisco, focused on tech. Sadly, no space. But I was fortunate enough to join Point72 about 4 years ago as a member of the AI team. Turns out all the AI deals I did were in defense. So we inadvertently sort of developed a defense tech strategy and defense tech portfolio out of that. And here I am. Did you
ever consider joining the primes or, joining a more traditional defense company, or was that not really on the mind or horizon?
No, I mean, this was a really different time, right? This was 2014, 2015. It was before, some of the bigger defense tech companies were founded, Shield AI, Anduril. And, it wasn't really an option to sort of meld the tech and the defense at the time. So I never really considered it. I was always full in on doing something that was probably tech related, but certainly trying to expand my horizons behind the sector, and just managed to pull me back in.
So we obviously would love to spend the next 50 minutes talking about defense more broadly with you, but obviously this is a space focused podcast. So maybe just to kick things off, tell us a little bit about Point72 Ventures history with space and some of the work you guys have been doing so far.
Absolutely. So we've been investing in space for about 3 years. As you know, it's a very critical national security area. The areas we tend to focus more broadly within defense are sectors where we think, A, it's critical towards the balance of power between superpowers, and then also where we think that technology could actually make a difference. Space qualifies for both. Our first investment was actually Stoke Space, which we did 3 years ago. More recently, we've announced investments in Apex Space, satellite bus manufacturer, and Starfish, which is doing RPO and satellite servicing. And we've been excited to invest in the industry and the sector so far, and look forward to continuing that excitement in the future.
So space isn't the first place people think of when it comes to venture capital, more broadly, I should say. And I know you guys cover a lot of different areas, not just space. What would you say sparked the firm's initial interest in the industry, and the initial investment in Stoke?
Yeah. So one of the things we do here at Point72 is a lot of research. So before we do an investment in a space or in a sector or in a specific company, we do a bunch of market diligence, really to make sure that we're confident that we know what we're doing. And so when we first started looking at space as a potential investment domain, I started doing a bunch of work. And the very first thing anybody tells you when you start doing research in space and you tell them you're thinking about investing is they say, don't invest in a launch company. So what's the first thing we did? We invested in a launch company. And that was an interesting conversation, right? I came in very skeptical based on the work we did in the past, but got to know Andy Lapsa, who's the CEO of that company, got to hear their story, got to hear the market thesis, went back and did a lot of our standard diligence work, had a lot of conversations and discussions and research as well. And then we ultimately got to conviction on what he was pursuing in the actual market. The next investment, we basically waited another 2 years to actually make there was Apex. So Apex Space is a satellite bus manufacturer that's really focused on the new era of proliferated LEO and proliferated satellites, focused on making performance satellites with the best unit economics out there. We got to know that company and sort of realized that it tied with our view of the market of where the world was headed, with the emphasis on proliferated LEO. And then if you move further to our latest investment, which we just announced, which is Starfish, we're very excited about that one. That one also focuses on where we think space is going, which is previously used to put assets in space and they used to stay there. Now, not only are you looking to use those assets in interesting ways, but you might have assets moving into, through, and from space to different orbits. So it's a new era that we're particularly excited about and that we've invested behind.
So you mentioned where you think space is going. So maybe let's take a step back. How do you have a fully fleshed out thesis around space at the moment? And if so, what is it? And then maybe talk a little bit about what are the trends and larger scale developments that are making the industry exciting for you guys to spend time in.
Awesome. Well, I think if I was going to illustrate our thesis, it's where we've invested. So it's an in-space mobility into and through and from space, as well as supporting the shift to proliferated LEO and proliferated architectures more broadly. As far as developments that I think are exciting in space, we noticed, or we're just recording this after the latest Starship flight. I think Starship coming online in the next several years will be particularly exciting for the ecosystem and certainly serve as a catalyst. I think more broadly in space and defense, the Space Development Agency and how they are buying systems is also particularly exciting and a catalyst for the ecosystem. So for those of you not familiar, the Space Development Agency is taking what used to be previously exquisite assets in the defense sector and then building a proliferated architecture to spread those capabilities over much less expensive, much less exquisite, but more proliferated assets. Functionally, what that does and how they do this is they launch tranches on a year or multi-year cadence. It's predictable. They pick multiple winners and they recompete after every tranche. So what that does is functionally it actually creates an ecosystem where there's a catalyst for plenty of different vendors who are doing interesting things in the space domain that may not otherwise exist. So I think that's a particularly interesting trend that we're particularly excited about.
So, Proliferated LEO. So, obviously, there's this government program, $13 billion. It's captured a lot of people's attentions. I'm curious, like, is where the government has indicated where the dollars are going what gets you excited about Proliferated LEO, or do you have a broader kind of view around why it's important for national security?
Yeah. So I think we certainly track federal dollars and really want to understand what budgets might look like in the future. And so definitely that's an area that's predictable and that gets us excited. I think in the next few years, you're going to see sort of this initial government catalyst and national security catalyst ultimately metastasize to the commercial ecosystem. And I think you're seeing folks see the cost of launch come down, see the economics around building satellites improve, and then find that where it was previously difficult to have your own constellation that does various things, it's now potentially interesting and feasible for commercial companies to do the same thing. I mean, the most popular ones I think we see out there are OneWeb and Kuiper, but there are others who are contemplating similar constellations that are feasible or will be feasible in the next few years, whereas they were not previously.
Do you do a lot of predictive work around where you think the next sort of where the government dollars are going, what might be the next program of record, and then sort of base investment decisions off of those types of analyses? Like, I'm curious, like just a more general question, doesn't have to be space specific.
Yeah. So we have long time horizons. We have your typical venture time horizon, which is these days probably like greater than 10 years. And so you have to be confident that there'll be dollars spent after that. As far as having any sort of special prediction, like there's a lot of great open source material out there that we typically leverage. So it's not like we have any sort of special methodology there. It's just sort of leveraging what's openly put out into the ecosystem through various documents and notes and information.
And where in a company's technical development cycle are you typically looking to invest? Are you going to look at, for example, a company that just has maybe, a slide deck and some blueprints, or, are you looking for, hardware on the stand or hardware in space before you're making your first investment?
Honestly, the PowerPoint's my favorite kind of pitch. Like I mentioned, we're able to participate throughout the cap stack. So we're frequently taking pre-product, pre-revenue pitches where it's just a founding team and a deck. We're also taking different bets where folks have launched something into space or have some sort of product and have an initial proof point and then investing. Like I said, I spend most of my time at the early stage, but we're able to sort of invest later on as well.
And how does space fit into the broader portfolio? Is there a sort of more general top-down view on portfolio construction that's taken? Do you view the industry as certainly not as a hedge, but as maybe sort of like more of a riskier moonshot type element of the portfolio, or something else? I'm just curious, how does the industry fit into the broader venture portfolio?
Yeah, so we don't actually subdivide in terms of thinking, hey, we're going to make a certain amount of investments in space or a certain amount of investments in other ecosystem. We evaluate each investment under its fundamentals and under how we think the outcome is going to be. I mean, we're investing out of a relatively large fund, and we're looking for large outcomes to support it. And when we see a business that we think can make it, regardless of the sector, we're certainly excited.
So you don't have a target number of like space investments you're looking to make like next year, for example?
No, I mean, we're excited about the sector. So, I'd love to continue to be active there, but we don't have a target.
And then do you, I think you kind of answered this question, which is like, when you make an investment in a space company, are you looking for synergies within the portfolio? Like, hey, we invested in this company, so this company and this company go well together, or this company could be a customer of this one, or are you kind of independent, like purely independently, like looking at valuing and verifying sort of each company's business model?
Yeah, I mean, we generally look at each individual investment on a case by case basis. There are times where we'll maybe do work for one investment and the research will be in sector A, but it'll have adjacent potential areas to keep looking. And then we'll find another company which sort of comes out of the work we did from company number one that's in an adjacent and complementary space. That's not by design. It does tend to happen, but by and large, we underwrite each investment on a case by case basis.
And so we know what happens when a portfolio company overperforms. Everyone's happy. It's exciting, for a lot of reasons. What happens when a portfolio company isn't hitting their milestones and they're underperforming? Like, how do you view those scenarios and those situations? Like, what are you guys doing in those moments?
So statistically, you'll actually find that in most cases, most venture firms most portfolio companies tend to, at the end of the day, either fail to catalyze or just fail outright for every single venture firm. So that's part of the model. That's basically the default state at the end of the day for a lot of companies that are getting started. Now, we obviously don't invest under that thesis, and we hope that things will work. But statistically speaking, they most likely won't, just within venture writ large. Now, in order to avoid that, we essentially offer portfolio services. We offer support. We work really closely with our founders. We're pretty involved. But at the end of the day, I think what founders really value is being candid and direct about where we think things could be going better, or potentially what they might be able to do to help things being turned around. And what we ultimately strive for is, regardless of what the outcome is, folks will be happy they partnered with us and would have partnered with us all over again at the very beginning.
So right now within space, you have 3 space companies, if I'm not mistaken: Stoke, Apex, and Starfish.
Correct.
So walk us through the process of becoming a portfolio company of you guys. Like, what does that look like? Obviously, you'll take the cold pitch, you'll take the conversation on the pitch deck, but from sort of the start of that conversation to when that company gets that check, what does that process look like from a founder's perspective, maybe?
Yeah. So like I said, we do a bunch of research before we talk to a company in a specific sector. So we like to show up prepared, like to understand their market, and like to have a meaningful dialogue so that we can essentially show what we'd be like as partners from the get-go. Oftentimes, we'll get in contact with a company, either somebody we outbound, or we meet through our network, or what have you. We'll have a conversation, and then there's really nothing cosmic. It's pretty standard when it comes to most venture processes. If we decide there's a mutual fit, after meeting the team, after hearing their story, it'll sort of work out at the end, and then there'll be a Point72 portfolio company. Like I said, we practice what we preach in terms of working with companies, knowing the space, and then hopefully we're able to be good partners moving forward.
And how do you think about the space and defense worlds, especially when it comes to the venture involvement in those areas, has become quite hot. We just held our investor summit a couple weeks ago. You were there. The interest level on the institutional side is pretty significant, which is exciting for a lot of reasons. It's exciting for the industry. It's exciting for the future of the country. Hopefully, it's exciting for people's LP pocketbooks. But ultimately, when Point72 is up against a competitor or an organization that looks like you from a size perspective, from a check writing ability, from a resourcing capability, like, how do you think about winning a deal over a competitor? And maybe talk a little bit about what the firm provides beyond just capital.
Absolutely. So I think what it comes down to is the domain expertise I was mentioning before. So we try to know someone's market. We try to know what they're doing pretty extensively. That also has the effect of understanding sort of where different levers and different ways you can maneuver various aspects of the competitive landscape and the market landscape and the go-to-market. And so we're able to sort of take those insights and then work with the company to share them and discuss them moving forward and ultimately optimize themselves. Oftentimes, because we're doing a bunch of research, we'll get to know other people in the ecosystem, perhaps find ways that we can connect them with folks we think might be helpful, either as a hire, an advisor, or what have you. And then we are, of course, a venture firm. So as the company scales, we're able to provide capital moving forward.
And how does is there any sort of interaction or partnership with the public and private side of the firm, or is it pretty siloed?
It's two separate businesses, right? Like there's the public side that has their mandate and what they work on, and then there's us on the private side. What unites them is sort of the overarching Point72 architecture, Steve Cohen at the top, and then also the idea that we need to be domain experts, as well as B, underwrite any investment we do with sort of thorough research, be thematic driven, be data driven, and really have high confidence that our investments are tracking towards what we think.
All right. Well, let's switch gears. I want to talk about the market and talk a little bit about the market dynamics that we're seeing. So, what is your current view on valuations in the market? And feel free to answer however you'd like. We can talk about public markets, private markets, but in general, how are you thinking about deals that you're seeing, the pricing that you're seeing, what founders are asking for? Is it a buyer's market? Is it a seller's market? Like, what are your thoughts there, high level?
Absolutely. So I'll stick to the private markets because that's what I know, and I can talk to the underlying dynamics that we're seeing, particularly within space. Fundamentally, to scale a space business or a defense business, you need to spend a bunch of capital. You need to basically invest in CapEx and COGS and working capital and elsewhere. And so it's sort of a voracious appetite to scale. There's also no shortage of discussion how sometimes really building a big business in either a government focus or deep tech can take a while to actually scale the top line and get there. So you marry those two. And what you actually wind up seeing is that these companies have voracious capital needs. And typically, historically, the only way to really finance them is through equity financing, which is very expensive. And what you're seeing is sort of these large rounds because companies need a certain amount of CapEx that's sort of driving up the deal dynamics writ large, both the valuation and the deal dynamic side. I think what's certainly healthier and would be better for the ecosystem is if there's non-dilutive financing, either through the debt form or through asset-based lending or some other mechanism to be able to help scale these companies without forcing them to basically take a bunch of equity and then invest in CapEx. You see the Office of Strategic Capital working on that through a latest direct-to-company lending program. Department of Energy for energy projects has been doing that for a while. But I think the further we move along that ecosystem and the further we move along additional sources of financing, sort of the more in line with what you'd expect to see from a revenue growth profile and from a business maturity profile, you'll see the actual rounds potentially tracking that.
And would you say there's any particular stage that's interesting right now from a valuation perspective that you'd want to lean into? Kind of, and I don't want to put a letter on it, but
yeah,
go ahead.
Well, I don't know if it's from a valuation perspective necessarily, but for that and potentially other reasons, we spend the bulk of our time at the early stage, sort of at the very early days of product, pre-product, and just sort of excited to invest there. But like I said, we have the ability to move up the cap stack and invest relatively later as well.
So you mentioned non-dilutive funding. So I'm kind of curious, do you think that there's enough government funding right now for startups? And maybe also talk a little bit about, do you feel like that startups are winning enough contracts to justify a lot of their perspectives that, hey, our business is going to be supported by government dollars? There's companies that say, hey, we're going to be, we have this track to a lot of government dollars and contracts. Some that say, hey, government dollars are great, but we think the demand is going to come from commercial. A lot of those companies that said that 2 to 3 years ago were generally speaking wrong. The commercial demand did not come to fruition as much or as quickly as investors and companies expected. So there, in my mind, there's been sort of now this reversal in a lot of those businesses to say, oh, well, now our business is going to be largely government dependent. So, do you think that dependency is sort of the right way to think about these businesses right now?
Yeah. So to answer your first question on is there enough funding, I think there's been plenty of discussion and documentation in that. I think there's a bunch of work to go when it comes to spending government dollars towards emerging technology providers and then bringing those capabilities on board to the DoD and the Space Force in particular and elsewhere. Now, I'll discuss the Space Force since given the topic of what we're chatting about, and that they actually have the smallest budget. So the top line for the DoD is $800 billion. The Space Force's budget is 25. And they essentially need to use that as of today to both maintain and sustain and make sure our current capabilities are operational, as well as add additional capabilities that they'd want to build in the future. Now, I don't think, in my opinion, that sort of like represents the adequate amount of capital that you need to do both those things. So I think both from a budgetary perspective as well as a startup engagement perspective, that number probably needs to go up. The funny thing you'll find, though, about the Space Force, that even though they have the smallest budget, they're actually probably the most effective at working with the emerging startup ecosystem. Take a look at the StratFi list over the past few cycles. You'll find that they're investing substantial dollars, not small amounts, in interesting and novel capabilities in ways that maybe other services haven't quite kept up. On the dependency point that you mentioned, we think it's very important for startups in this space to both have a defense and commercial story. To your point, I think early days in trying to build a solid business, you're going to find much more stability within the government market compared to the commercial market. However, this is a segment where 5 years in the future will look very different than 5 years in the past, just given all the capabilities that are coming online. And so, I think that ultimately you'll have a much bigger space economy that drives that command from the commercial front. But for the near term, I think if you are wanting to build a successful space business, you need to have a really good, really credible story on how you can impact the government and national security.
Yeah, and to your earlier point, so I agree with that. And to your earlier point, the I think 60% of the Space Force budget is actually allocated to R&D. So clearly a big chunk of that is specifically geared towards how do we make things, how do we fund innovation, which is always great to see. Well, look, we can't talk about valuations without talking about SpaceX. And I know Point72 Ventures doesn't have an investment in SpaceX, so maybe this is more of a Chris, what do you think question? But SpaceX's latest tender puts the company at $250 billion. Lots of debate over, at least in the institutional world, on whether that makes sense or not. I'm curious what you think. Do you think that makes sense? And let's just say, would you write a personal check into the company at these levels?
Awesome. Well, I spend all my time thinking about sort of where we can write a check as a firm more broadly. And I also haven't seen, like I said, not an investor, so I haven't done deep dive in the numbers, haven't done deep dive with management the way we typically would, so I can't accurately say whether or not it's overvalued or undervalued. I've learned over time that you basically need to know details before you actually comment, throw something out there. I will say that it's been absolutely incredible, as we all have noticed, to see how they've developed over the past few decades and really few years. Like if you think about it, 10 years ago, when they were going after the ISS servicing contract or elsewhere, they were really the underdog compared to the established incumbents. And over time, they're absolutely dominant in the market by all the numbers, by all the metrics that you measure. So it's an incredible story and a reminder that if you bring together a team that are really capable engineers that are really motivated, that there is actually the potential to disrupt what seems like an undisruptible space. Overall, like what they're doing, particularly with Starlink and the follow-on implications, I think they're just launching the direct-to-cell service, or the latest reports, is absolutely incredible. And I think it could be particularly transformative to the overall communications ecosystem on Earth. So I think a lot of good things will come in the future, and I think it's an awesome company.
Gwen actually recently said, I thought this was interesting. She was like, yeah, I think Starship's going to be a bigger business than Starlink. Now, you could argue that she kind of has to say that, right? Given who she is, but I'm kind of curious. Do you see a world where that's even possible? Because a lot of people cap what the launch business is going to be worth. And I'm not asking for specific dollars or numbers or figures, but just kind of curious, like what she's saying, right? So Starlink, I believe, is the fastest company to 5 billion in revenue ever. So like ever, forget about space, just ever. And I've actually said that stat out loud. No one's corrected me on it, so I think it's right. But my point is, it's a great business. And has the potential. I mean, assuming a lot of the things that SpaceX is saying is right on the useful life of every Starlink satellite and their marginal cost of a Falcon 9 and all that stuff, assuming all that's right, it's a great business. But now you have Gwen saying, well, hold on, this is a great business, but Starship's going to be an even bigger business. What do you think about that?
Yeah, well, I mean, you're I don't know if you know this, but your payload report is actually like cited most frequently as sort of the source for the sort of public source that is authoritative for all things SpaceX. So you definitely know what you're talking about there. I'll say that I haven't done the economics on a Mars colony. I think in the long run, if you're looking whenever, if that comes to fruition, whenever that happens, I think it could be interesting economics. But I'll say that I think it's very early days with Starlink, and I'll throw a personal experience out there. I recently took a pitch from a founder who was on a boat in the middle of the Atlantic. Just perfect Wi-Fi, better connectivity than here at my house, and it was absolutely incredible. And I actually used to be on the offshore sailing team when I was back in college, and would be in the middle of the Atlantic without anybody to talk to. So I think we're interesting we're in store for a brave new world there when it comes to different capabilities coming online.
You mentioned Mars colony, like what is that worth? I don't know. I don't think anyone knows. And the one comment I'll make is that, I do think that we're in a point where, if Elon goes to the president and says, hey, for call it $10 billion, I can get, us to Mars and humans on Mars during your administration, regardless of the president, would you take it? Would you want that to happen? I would say most people would say yes. Like if that's the case, then yes, let's do it. Right. So I do think we're steering into a completely different era. Anyway, a lot of exciting things to kind of watch out for. Now, my last SpaceX question for you is: do you think SpaceX is a monopoly?
Yeah, so I think if you look at all the metrics, particularly when it comes to mass to launch, I think it's like some people say 70% plus in some years. Other people say above 90. So it's certainly a very dominant company. We think that they are a catalyst for sure in the market when it comes to putting things in space, putting bigger things in space. Think about the ability to put large structures. Everything from space stations to telescopes to different things that could potentially be serviced. So, I mean, there is no space without SpaceX, so they certainly are a dominant player.
How does that dynamic kind of play into the strategy of your team? So, back in the day, I kind of think about like the early 2010s, 2000s when I was in the financial services industry and looking at a lot of these companies. I remember a lot of people would say, "Oh, well, what if Google does that, or what if Facebook does that?" Right? Any idea you had that was remotely app related or consumer tech related or ad related, it's like, well, what if this person did it? Now you have a company, SpaceX, that is, in all sense of things, a monopolistic player in the space industry. How does that dynamic play into your guys' strategy when you look at a company? Do you ask yourself like, okay, well, we can invest in this company, but what if SpaceX does it, right? They could kill this business overnight, theoretically, right? Is that a concern? Is that something that comes to mind?
Yeah, absolutely. When you're looking at investment, I think you have to be very thoughtful about where SpaceX in particular fits within the overall landscape. Many times it's actually a catalyst and an enabler. Other times you have to be a little bit more thoughtful about sort of like, hey, what angle is this? What makes sense? I think it'd be very difficult to be a venture capitalist if you didn't think that an incumbent could be disrupted. So we deal with this question not only in space, but in pretty much every single market. So it is important. But I think it's basically the price of doing business, either in space or any other sector.
Yeah. When you look across the startup landscape, like what are the biggest barriers do you see for the startups today? Like what and maybe talk a little bit about how can the investment community actually help the startups overcome those barriers?
Absolutely. So I think the biggest barrier when it comes to space, or one of the biggest for startups, is actually the overclassification issue. So previously, it was very difficult to get any leadership to talk about exactly the dynamics of space, what was going on, what the problems were, where was there a willingness to spend money versus existing capabilities that were met. I think in the past few years, you've actually seen Space Force leadership get a lot better at doing that. But that being said, there are still tremendous classification barriers to starting a business in the defense sector more broadly, but specifically in space. Let's say you have 4 or 5 engineers spinning out of like a Lockheed Martin or elsewhere who were cleared, who have personal clearances. It would probably be at least a year, if not longer, before that company could work on any sort of classified data because of the process of getting what's called a facilities clearance or an FCL. And I think that's a tremendous barrier towards folks actually being able to address national security problems. One of the other issues that we're seeing here is the one I pointed out before when it comes to it takes a lot of CapEx to build a space company. It takes a substantial amount of working capital, especially when you're ordering parts. And having access to that non-equity, like non-dilutive financing, either whether it's a government dollar or whether it's a loan or what have you, I think is probably one of the things that's missing in the ecosystem. How do you if you're an investor, how do you help folks navigate that? Well, at this point in time, we've sort of seen companies go through the rigmarole of getting a clearance. So to the extent we can potentially advise companies on who they should talk on from an advisor perspective or from another perspective on how to navigate that. One of these things, the easiest things we can do there is basically advise companies to start that earlier on in their life cycle as opposed to later. That's one way. Of course, on the financing front, either directly providing financing for follow-on companies, as well as linking them with folks who can provide potentially some of that non-dilutive cash that we're describing before.
Are there common mistakes that you see founders make?
I think in space, there are lots of folks doing really cool things, but it can be hard to tie the business case. So I think the best founders, whether it's a sector or whether it's another, think about their products within the context of the business case they're trying to solve. And they architect their product in a way that they know will be scalable, in a way that will eventually create something that's a little bit bigger. So I think the thing we see most often is actually folks who don't think about the business case or haven't thoroughly been able to articulate the business case for basically what they're doing.
Yeah, I think it's a good point. I think there are a lot of companies out there. I shouldn't say a lot of companies, but there's certainly a number of companies out there that are, hey, well, if we build it, they will come. And the they will come part is probably correct, but it's probably many more years away than they expect, which means that there's these gap years where you have to kind of fund your business. And if you don't have that revenue either on the government or commercial side, then you fail as a business. So you might be right, but of course, it's the kind of classic, you're right, but the timing isn't wrong. The timing isn't right. So I do agree with that. Now, looking more broadly on the different areas of the market, I am curious, like what segments of the market do you feel are overhyped, if any, or underappreciated, if any? Any areas where you're like, hey, if we see a company there, we're probably not touching it, or hey, if we see a company there, we're going to lean in.
Awesome. Yeah, on the overhype front, that anecdote I told about Stoke, where I insisted that we wouldn't invest in a launch business, and then we eventually wound up doing it. I've learned not to put my foot in my mouth on that side any more than I have to. So I'll focus on the sort of areas we're excited about. So it's the shift to PLEO is what I mentioned before. So I think when companies are able to put up large constellations and the cost of launch has come down, the cost of building a satellite in general has come down or operating a satellite, I think that's a huge and interesting catalyst. So we're focused on the second or third order effects of it just being easier to build a constellation and what that specifically looks like. The other areas that are interesting are anything involving in space mobility. So essentially being able to launch into space, transport from LEO to GEO, move around GEO, potentially one day move into cislunar space, I think is an area that is just starting to come online now, and one where there's interesting opportunity that certainly, as I mentioned, underwrote our thesis behind Stoke and underwrote our thesis behind Starfish.
So looking out sort of the next decade, how do you see the firm's role evolving in space? Now, I know you mentioned earlier we don't have any set boundaries or sort of segmentation on how many companies we invest in the sector. I mean, do you see a scenario where you're investing in a lot more space companies than any other industry that you guys are focused on? Like, what do you think that looks like over the next decade?
Yeah, space is interesting, as I mentioned, with just more launch capacity coming online, the unit economics constantly improving, and then I think the space 10 years from now is going to look dramatically different than it did 10 years in the past. So I think there will continue to be catalysts for growth. I mean, we continue to look at space companies. And so I hope there will be plenty more. I can't say exactly how many or what that looks like, but we're certainly excited there. The other interesting thing, and this is something I really didn't appreciate until I'd spent a couple of years as an investor, is you meet a company, they have 17 people or they have 5 people, they're sort of tinkering in a garage in El Segundo or in Seattle, actually, where a handful of our companies are. And they wind up doing well, they wind up growing. And that 17 people turns into 50 people, turns into 100 people, turns into 300 people. They have multiple assets in space, or they're doing cool things. And I didn't quite appreciate how awesome it would be to sort of see a company that the founder you've partnered with just develop and evolve over time. So if I could write my ideal sort of world in 10 years, it's having partnered with the founders and partners so far, the founders we're partnering with in the future, and just seeing their companies evolve and their technology evolve, and just living in an awesome new world and being a great part of it.
Are there any trends or kind of gaps in the market that you wish more founders were tackling today?
Yeah, I don't think, believe it or not, I don't think anything comes to mind in terms of, hey, I really wish people were sort of building this. Space founders in particular tend to have like a pretty forward-looking vision when it comes to what needs to exist. And it's a market where you basically have to hit the inflection point at the right time. So even though you think about, hey, something needs to exist that doesn't, if you build that company 4, 5, 6 years too early, it can be problematic. So I think from what we're seeing, you have folks right now building for a post-Starship world. You have folks building for proliferated LEO world, as I mentioned before, and they're building the right things. The next thing that comes after that is cislunar and broader space. So I think as that approaches, that could potentially be interesting. But by and large, I think if there's any segment where the founders are sort of painting the vision of the future and marching straight toward it, I think it's space.
And we have a lot of founders and startup folks that are listening, that typically listen to the show. So curious, like any advice that you'd give them, that comes top to mind. You're like, hey, if you're going to build a company in space, or you already have a company in space, coming from an investor, like here's what we want to see, or here's what you should be doing.
Absolutely. So there's a lot of really cool tech, really ambitious vision. I think what's important is what I mentioned before, in that you close the business case. You understand, you have an idea of what your unit economics will be at scale. I know that sounds odd for a company that hasn't necessarily built a product yet, but it is important that you at least sort of have an idea and thesis and think about that. I also think that there are a lot of folks that are fantastic engineers or they're fantastic sort of visionaries from a go-to-market and from a business perspective. And I think it's important that you tie both. So find what your complementary better half is from an investing perspective, and keep building, is my last piece of advice. I have a 3-year-old. I live in DC, and one of the benefits of living in DC is you can actually go to the Air and Space Museum. So he's 3. He's been to every Air and Space Museum at least twice, maybe 3 times. He wants to be an astronaut. he wants to go to Mars. So for my son Sam, I'd encourage you to keep building so he can realize his dreams at some point in the future.
Did you think when you were a kid that we would be living in a world where Mars was like right on the horizon?
Yeah, I mean, it is exciting. We'll see how everything turns out, but certainly there's the meme picture where I don't know if it's a meme, but basically you have like the Wright brothers, and then you have the sort of Neil Armstrong on the moon with the American flag, and it's like these events are 64 years apart, and I think it's going to be a while. It's actually not too far away until we're the same distance from the actual moon landing. So I think in some ways it's overdue. In some ways it's awesome that events are trending, that we're exploring the cosmos once more.
Yeah, no, I agree completely. I mean, if I were to answer that question myself, I would say I don't. I've always been someone who's very interested in space ever since I was a kid. Wanted to make it my career, but didn't happen. Well, I should say, work in the industry in a way like as an engineer, like building hardware, or like staring at the stars. Obviously, I've been able to be an information provider to the industry, which I'm obviously grateful for, and hopefully we continue to do good work. But I will say, Mars was, and I've been following the shuttle programs and all our space programs for a long time, and Mars is always this like distant not memory, but distant sort of like goal. It's like, hey, we'll get there one day, and like every administration would say, oh, it's going to happen by this year or this time period at some point, and you always kind of knew when it was discussed, it was like, okay, sure, right? And I think now for the first time, these like timelines are starting to compress, and the timelines are now actually starting to feel more real, which is exciting. I don't think we've had that in a long, long time, at least not since you and I have been alive. So I do think it's a fascinating, super exciting time to be doing this. Chris, just to kind of wrap up here, we've spent a lot of time talking about space and defense and your background, but tell us a little bit about what you do for fun when you're not investing and staring at financials and talking to founders.
Well, I sort of talked about it before. I have two young kids, so I have a 3-year-old and a 3-month-old actually. And so when I'm not at work, when I'm not on the road at a payload event, I'm actually probably spending time with them, either taking them to a museum or the zoo or something else, and essentially just spending time with the family, exploring a DC or wherever we might be. So
just being a great dad. Great answer.
Attempting. I don't know if I'd go that far, but I'm attempting.
It's funny you mentioned at a payload event, but I think our goal is like, hopefully, next time we chat, next time we have you on the show, the only events that you're going to are events that we're putting on. So that's our goal. Like within defense and national security space, we just want to make sure that we put on the best events and that, we're seeing each other probably once every couple months. So that's the goal. So we'll see if we get there. But Chris, thanks so much for being on the show. It's a pleasure to have you. Great as always. And, looking forward to having you back on the show sometime in the future.
Likewise. Thanks, Mo. Appreciate it.
Thanks, Chris.